If there's one company that perfectly captures what unstoppable momentum looks like in today's market, it's Eli Lilly, LLY. In its Q4 2025 earnings, this healthcare powerhouse is breaking records, driven by explosive demand, expanding margins, and a bold march toward an $80 billion revenue milestone. Our briefing today covers the beat, unpacking the massive top and bottom line surge, the fuel, the impact of Mounjaro and Zepbound, the cash, analyzing the free cash flow waterfall, and the horizon, the catalysts and headwinds for 2026. The numbers are staggering. Q4 revenue hit $19.3 billion, up 43% year over year, driven by a massive 46% surge in volume. Non-GAAP earnings per share reached $7.54. For the full year, total revenue climbed 45% to $65.2 billion, as their incretin portfolio achieved historic scaling. This revenue surge was entirely driven by product demand. While operating expenses rose 26% to $7.55 billion to support these massive launches, the company's in aggressive reinvestment mode, with R&D up 26% and SG&A up 29%. Efficiency is winning the battle against pricing pressure. Despite the headwind of lower global prices, Lilly's GAAP gross margin actually rose 1.7 points to 83%. Elite production efficiencies and a favorable product mix are successfully offsetting price cuts. Lilly's earnings are exceptionally clean. Unlike high-growth tech firms, their margins aren't inflated by stock compensation. Stock-based compensation was just $646 million, a mere 1% of total revenue. This allowed GAAP net income to surge 50% with minimal distortion. Meet the blockbusters. The company's incretin empire generated $36.5 billion in 2025. Mounjaro led the way with $23 billion, while Zepbound contributed $13.5 billion. Together, these assets are the primary growth engine for the entire enterprise. Beyond obesity, Lilly has a robust secondary foundation in oncology. Their drug Verzenio posted steady 8% growth, reaching $5.7 billion in 2025 in revenue. This provides vital cash flow stability outside the volatile weight loss media cycle. The expansion is global. The US market grew 43% to $43.5 billion. However, Europe is the fastest growing geographic segment, surging 67% to $11.6 billion. Total international revenue reached over $21 billion. Looking at liquidity, the company generated $16.81 billion in cash from operations. They funneled $7.84 billion in capital expenditures to fund aggressive manufacturing expansion, leaving a healthy free cash flow of nearly $9 billion. Shareholders are seeing the rewards. Lilly returned $10.1 billion in investors in 2025 through $4.1 billion in share repurchases and $6 billion in dividends. Looking ahead, the Q1 2026 dividend is set to increase by another 15%. Is the premium justified? LLY trades above its historical average, with a free cash flow yield of about 1.11%. But this premium is anchored by a 60.5% share of the US incretin market and forward growth rates exceeding 40%. The 2026 diagnostic shows strong catalysts, including potential FDA approval for an oral GLP-1 in Q2 and expanded Medicare access in July. We are monitoring headwinds like global pricing declines and a $4.7 billion inventory build specifically for new launches. The 2026 horizon looks bright. Guidance suggests revenue between $80 and $83 billion, a 25% growth rate, and a significant jump in earnings per share. Lilly is outrunning headwinds through elite efficiency, and the growth story is still in its early chapters. Did this Lilly earnings briefing save you 3 hours of reading a 10K? Then don't forget to like, save, and share this video. Follow and subscribe to ZinvestZ for more smart investing insights. Thanks for tuning in.